Right. Okay. So first topic of the day for us is going to be something I was scribbling up for the Substack, and then thought it's too boring. We'll just talk about it on the podcast instead and get Stephen High's opinion. But basically, it's the suggestion, hint, maybe statement that Trump wants to move US companies from reporting quarterly statements over to half-year statements. So essentially taking away that sort of 3 month thing reporting and changing it to a 6 month thing. We're fairly used to that in the UK, of course, and in Europe because that's how we work anyway, pretty much. And yeah, I find it strange, and also I think there is good points to it. I'm not sure that what America needs right this minute is less corporate transparency, but let's examine the history of why it's like this first. I think that's probably the best place to start. And I'll give you what I think are the pros and cons, and then I'll let Steve chime in, and we'll see what you guys think by the end. If you let us know in the comment section what your thoughts are, but I think it's a very American issue, I would say. So before the 70s, US companies were pretty sensible about how they reported. They'd report numbers twice a year. Some of them only did it once a year if they were feeling really relaxed about the numbers. Everybody coped just fine, if you were wondering how that was. Essentially, over the sort of 70s, 80s, America had some economic wobbles, some corporate scandals that we know of, the Enron scandal, etc. Big scandals, essentially. And because apparently this happens absolutely nowhere else, they decided the obvious solution was to make everybody report 4 times a year instead of actually fixing the problems. The SEC stepped in, their sort of subtlety of a sledgehammer, and said, right, from now on, you're doing this every 3 months, and if you don't like it, tough. And the reasoning was maybe a bit more sound than that, in that frequent reporting makes it harder for companies to hide financial disasters for extended periods. Plus, they had like a lot of ordinary Americans or retail investors piling into the stock market, and essentially that they deserved access to the same levels of information as the big investment firms. And I think that's fair enough. One of the driving factors behind that is something we'll be writing about in the Substack soon, was David Gardner's campaign for fairness in reporting, and just a lack of the stopping of insider information being leaked out to large investment firms. So I think Trump's argument has some merit, even though I would say this is coming from somebody who I'm not sure is known for long-term strategic thinking. So there's a quarterly hamster wheel, essentially. So picture this: you're trying to build a meaningful company. Every few months, someone barges in and demands to know, how many widgets you've sold and why isn't it more widgets than last quarter. And it's like sort of being judged basically on what let's get on the garden analogy, Steve. Being grown on, judged on what you've grown in the garden, regardless of whether you're building something, building a garden for sort of the long-term future. And what happens with this is American CEOs essentially end up making decisions that look good in the short term, but can hamper long-term performance. So let's look at things like cutting research, R&D budget, slashing marketing spend, sacking people. And this can kneecap companies' prospects. And it is remarkably short-sighted to do things like that a lot of the time. There's also another sort of point. It basically turns reporting into this sort of bureaucracy money pit. Preparing quarterly reports, as you'll see when you go through them, it's not just a couple of spreadsheets that get chucked out on a bit of white paper. There's armies of accountants and lawyers and auditors and weeks of management time that could be spent on something productive producing these things. And for small companies, there's a real financial burden to this as well. And the estimates that I've seen suggest companies could save millions and redirect weeks of executive attention to running the business if we were to swap to 6 monthly reporting. But I guess before we get carried away with this being a revolutionary idea, there are obviously the significant downsides that we should consider. So you're going to end up with an information void of sorts. 6 months is a long time in modern business, especially in these software companies. Think about all the things that can happen in half a year, from what we've seen just through April to today. The entire market sectors can shift, new competitors can emerge, global pandemics can hit and reshape industries. Without regular updates, investors are essentially operating blind for months at a time. And when companies do report, any surprises could send share prices on kind of like wild rides. Um, Insider trading could raise its ugly head again, and I think this is one of the most concerning things. Company insiders, executive board members, employees with access to the sort of sensitive information and know what's happening every day within the business would obviously have access to information before investors. Already, you get sort of people trying to disseminate this information out, getting paid to disseminate this information, and even though it's illegal at the moment, if you were to move reporting even further out, this could happen. But also, you end up with the problem of people searching for information and people kind of making information up, so less trustworthy sources trying to model things and sort of speak about them as if the truth. We already get this now in any kind of penny stock forum in the world. You go in there and people are making stuff up which just doesn't exist. Tesla is one of the people who also forums of people just manufacturing information from voids of information. Basically, there's an insatiable need for news about stocks, and people like to fill it with crap. And all of this leads to sort of an unleveling of the playing field, I would call it. But yeah, I think you end up with market chaos essentially if you're not careful with how we deal with this. So the UK deals with it by doing semi-annual reporting, but they also do semi-annual trading updates as well. Where Steve and I laugh at some of these because there are quite a few lines of nothingness. Sometimes the sort of regulatory statement at the bottom has more information than the actual trading statement themselves, but it is something. They don't elaborate as much as the American quarterly sort of circus-like reports, but they are enough just to stem the sort of speculation, I would say. So it's not revolutionary, is what I'm trying to say. Is moving back a step is not revolutionary. So I think so my opinion is I think it would be a good move for the American system because I think they've created a system which is obsessed with short-term performance. And you can see this if you look at holding periods from the 70s to today, they have shrunk massively. And it's because people are so focused on the recency bias of recent news that they're making snap decisions when, just holding on for another quarter. I mean, how many times have we seen, Steve, a bad quarter being replaced by a great quarter the quarter afterwards. So yeah, Trump was trying to make out that this was groundbreaking innovation anyway. I didn't think that. There's not reinventing the wheel here. This is what developed markets have been doing for a very, very long time. I think the lesson is it's probably not really about market frequency. It's about market culture with values. When we value sort of sustainable growth over sort of quarterly theatre. But yeah, I think this is one where the debate will rumble on a little bit more, Steve. But I teetered towards being in favour with this, and I wondered what you thought.
I don't have a strong view. I think I quite like the idea, but my reason for it isn't necessarily a reason for Trump to do it. I'll come back to that in just a second. I guess this is the first time in a while, by the way, that I've heard anyone saying, wouldn't it be better if the US market was more like the UK's one? I mean, you talked about information voids along the way. The UK has two main defences against the possibility of an information void. Actually three main. One that you talked about, which is trading updates. And trading updates, they seem to be wildly deregulated in the sense that I'm not really sure what has to be in them by law, because Halmar is a good example of a company that puts basically nothing. It's in some cases got absolutely no numbers. I'm not saying they're doing anything wrong by not putting any numbers into that thing. I don't know that they necessarily have to, but they will typically say things like growth was good, the end, or growth was fine, or growth will continue to be solid, whatever that means. It tells you basically nothing, but it doesn't stop me trying to squeeze a 12-minute segment out of it when there's nothing else to talk about along the way. The other kind of check and balance we have against these things is we have a stock market that nobody cares about. So no one really misses any information on these kind of things. And despite this, in some ways, it doesn't feel like an information thing when Greggs is putting out notifications every other month, it seems, to say sales were flat and profits were up, and it's all right, we've opened a load more stores, but people keep nicking all our stuff. And that takes them sort of 4 updates in as many weeks. But having a market that no one really cares about is another reason that we don't have an information issue. And the last one, which is a more serious one in all of these cases, is there is a rule in the UK that says if something happens that is going to materially impact your, or likely to materially impact your profits and therefore share price, in the UK, if you're listed on the London Stock Exchange, you have to declare that immediately. You cannot wait till your next 6 monthly or trading update or whatever scheduled announcement. You have to say straight away, which is why we've seen Vistry and WH Smith pretty much out of the blue firing profit warnings over the place, where suddenly the share price is gone bang, because they've sent something out into the market because they've had to. They can't leave it till their next scheduled update and disappoint everybody and so on. They have to say straight away. And in the case of Vistry, the more that situation developed, the more they had to keep saying thing after thing after thing, and possibly confusing investors more than helping them. But those are the rules, and they prevent an information void of a sort. Transfer this back over to the US for the moment, and I suddenly think, well, that's a very natural check and balance to have on a longer reporting cycle, if we call it that, for the moment. But not with Trump in charge. With Trump in charge, the entire picture seems to kind of shift week to week in some cases. And my sense is that if you had companies saying, like Constellation Brands or whatever, or indeed US miners who are saying, okay, tariffs have stopped, but tariffs are back on, so we're now going to be higher, lower, you're going to get information all over the place from what I can see of it. If you took that thing, the kind of the system that we use in this country for avoiding big nasty surprises after 6 months, and just ported it across to the US. That's the kind of idiosyncrasy of the current president, it has to be said. I don't see that as a sort of long-term reason, but it does strike me as perhaps an unintended consequence of longer reporting here. Actually, it strikes me people are a lot more busy in these situations. There'd be information coming out all over the place if you just tried to counter the issue of a void the way that we do in this country. I do wonder whether a longer reporting cycle, and you're right in pointing out that Trump has reasons for this, and they are reasons for this. They all legitimately count in favour of, look, it's less work, it costs less, and it lets people get on with doing what they're meant to be doing, which is running their business rather than talking to analysts all the time. Those are 3 good reasons. Whether they're decisive or not is another question, but those are all legitimate considerations in favour. What we're seeing already at the moment is quite the fairly steady move of companies from the UK stock market to the US, either through acquisition or in some cases just upping sticks and moving there. And in a few situations we've said things like, well, Ashtead sort of basically does all its operating in the US, makes sense for it to be over there. And in other cases like Wise, that's not really the case. But that's always seemed to be more like a UK issue than a US issue for Wise. But if the US becomes an even more attractive place to list, I wonder whether this might lead to even more companies thinking, well, actually, the one thing the UK had going for it was that we didn't have to spend our time constantly doing conference calls to analysts, investors, and brokers and so on. Actually, we don't have to do that in the States either, and there's still loads more money, and PEs are all higher. Okay, fine, we're all off. The last kind of main reason for being part of the UK market disappears, or one of the main reasons for still being part of the UK market disappears. I guess from our perspective, this is my sort of last thought on the thing. My initial reaction was when I saw this was, but what will we talk about all of the time on this show? We'll have half as much content to talk about. And actually, my initial thought was, that's bad. But then I thought about it for a moment longer, and I sort of thought to myself, no, we won't just get around to talking about inflation again every other week. What will happen is between us, you and I now have a decent bench of UK stuff, actually, to talk about. And when you think about that, there are plenty of companies there that we think are interesting, and I think we're about to talk about 3 of them later on this show, or at least worth talking about, never mind interesting from an investment perspective. There's enough going on there that will keep the likes of us interested and gainfully employed. And what we have is quite a lot of kind of crunch in the week where everything, it seems, from the US reports in one go. and then still reasonable kind of gaps along the way. My suspicion is that we would actually be reasonably well placed for this. Podcasts that like talking about earnings, and they are good things to talk about, might find it trickier, but I kind of like our position with a nice balance of UK and US stuff. When we're writing for full stuff and we're busy talking about things that are going on with trading updates and so on and so forth, it does feel like there are weeks where there's really nothing of interest to look at. We look at a website that's called, I think it's called Sharecast or ShareSite or one of those, and it tells you who's sector report in the coming week. It's not comprehensive, but it generally is all, there's plenty there. And there are weeks where I look at them and think, I can't write anything about these things. I don't know enough about this random copper company. And I'm not going to go and find out enough about it because no one's interested. And then weeks where loads of things happen together. But even on a sort of 6 monthly cycle with some trading updates thrown in there, there's enough to kind of keep people interested. So my sense is I would like it, but I would like it from the perspective of the show in terms of what it means for the US and being investor-centric rather than trader-centric and freeing up people. I can take this or leave this from them. I sort of wonder whether what they will gain on the swings they will lose on the roundabouts in terms of not having to report as often versus having to report at random times when something happens. Not sure, to be honest. It's not obviously a terrible idea to me, and I think a lot of Trump's ideas are obviously terrible ideas, but I don't think this is one of them. So, yeah, revolutionary and groundbreaking, no. Obviously a terrible idea, also no, to my mind.
Yeah, so I had two thoughts on that, really, Steve. I thought we may have to swap to being a fortnightly show if that happened. But then when I actually thought about it a lot more, I thought, no, we'd probably just end up covering more companies. I thought we'd basically for sort of 4 weeks every quarter, we sort of dedicate this show to covering the same sort of probably 16 companies that we cover every time because we think they're fantastic companies and they usually have very interesting reports or at least very sort of colourful reports. And if they switch to doing half year reports, then we would be fitting in other companies. So I thought that was it'd be a positive for us. The other thing I thought was probably a positive was I wonder if there's an element of and I think this is one of many things, but holding the IPO market back is a sort of regulatory burden of having to produce these kind of financial documents every quarter, especially when you're going from having to produce essentially none of them at all. And I wondered if that was one of the many things holding back the IPO market. I think the abundance of money is another thing that's sort of holding it back, and there's no real reason to go public. But I just thought this might be one of the levers that if it was slightly lessened, that perhaps it might just help sort of tickle that IPO market along as well. So, but yes, that was largely our thoughts on it. I'll be interested to hear what everybody else thinks in the comment section. But I think we're mildly, meekly, maybe in favour of this one, but with a view to wanting to probably hear a little bit more of the detail before we make our minds up. Steve?
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.